Hey folks, it's Kevin. In this video, we're talking about down payment assistance programs, what are the pros and the cons to them, and whether or not you should be utilizing a down payment assistance program when buying a home today. First, let's start by talking about what are the two most popular down payment assistance programs that you'll hear about here in San Diego County. The first one is going to be CalHFA, otherwise known as CalHFA. Now, this loan program will offer you up to 3.5% assistance towards a down payment. So if you're using an FHA loan, you wouldn't have to come in with anything for a down payment. And if you're using a conventional loan, they'll lend you that 3% that's necessary on the minimum down payment requirements. Other things that you'll need to know is you're gonna have a minimum credit score of 620. And remember, that's the median of those 3 credit bureaus. Lastly, they're gonna have an income restriction of $183,000. And this is a combined household income, so you need to consider everybody living in the household. This loan program will allow you to borrow up to 55% debt to income ratio. If you've seen any of my prior videos, you likely know how to calculate a debt to income ratio. I'll link a video up above. But if not, you basically take your proposed monthly payment for the home that you intend on purchasing. You add in any minimum monthly payments for things like your mortgage, your auto loan, credit cards, student loans, and then you're going to divide that against your gross monthly income, and that's going to give you a percentage. Well, CalHFA will allow you to borrow up to 55% on their FHA loan product. However, I never advise extending yourself past 40%. And just so you know, these home loans with CalHFA are basically a silent second, which means that you don't have to make monthly payments, but it will have to be repaid if you decide to sell or refinance in the future. The second most popular down payment assistance program is going to be GSFA, otherwise known as Golden State Finance Authority. And this is very similar to the CalHFA product that we just talked about. However, this is a grant, so it does not need to be repaid. Which, I know what you're thinking, Kevin, why wouldn't everyone take advantage of this loan program? It's free money. Yes, in theory, this is free money, but that doesn't necessarily mean that that's the loan program that you should choose. Let's talk about what cons can come from using a down payment assistance program in today's market. In the most respectful way possible, I want to challenge your thinking a bit. Most people would agree with me when I say that purchasing a home is one of the single biggest financial investments most people make in their entire life. And I think you'd also agree that it's one of the biggest financial responsibilities that most people carry throughout the duration of their life. And so that shouldn't be taken lightly. If you're in a position where you don't have enough money saved up to cover your own down payment, frankly, it might not be the best time for you to buy. The reason I say that is because I know that life happens to all of us. And the last thing that I want is for you to be in a position where you have another obligation, you have to make that monthly mortgage payment, and God forbid your car breaks down and you don't have enough money in the bank to cover that expense and have it fixed. Okay, enough of me telling you how to manage your money. Let's say you do get pre-approved for a down payment assistance loan. What you're going to find is that the interest rates offered are higher than a traditional FHA or conventional loan, which means that your monthly payment is also going to be higher. In addition to that, you're likely going to have a hard time getting your offer accepted when you begin shopping for property and submitting offers. I say that because with a down payment assistance program, you're typically looking at a 45 to 60 day escrow timeline. That's the time in which you have an offer accepted to the time in which you get your keys. In today's market, it's very competitive, and sellers are wanting to close on their properties as soon as possible, which means that if you're submitting an offer with 45 or 60 days as the timeline, it may be unattractive to sellers. Lastly, these programs have restrictions on the type of home you buy or the area that it's in. In addition, if there's a renter occupying that property, it's likely that you're not going to be able to purchase it, since California does a great job of protecting rental housing. In closing, I'd like to say that I don't recommend using one of these types of loans when purchasing a home in today's market. Yes, I understand that it can be fitting for a specific person or family, but at the end of the day, I always recommend doing your best to save up for your own down payment, work on improving your credit score, and so that way you're in the best position possible when you do go out to purchase a home. Thank you so much for watching this video. I appreciate the support. If you know of someone looking to purchase a home and take advantage of a down payment assistance program, please share this with them. And lastly, please subscribe to my channel as you can stay updated with what's going on in the real estate market and these educational videos that I include along the way. Thank you so much, and I'll see you in the next one.